So this is on Friday. It's on November 18th, 2022. And I remember the last time we were talking about money flow. And when we were talking about the money flow from within the capital markets, that's the bonds, the equities, the commodities, and the currencies. So we was talking about interest rates, yeah, risk appetite, risk aversion. But today, I want us to assess the market sentiment, and the best tool that I use for that is the COT, the commitment of a traders report. And as you can see on my screen, this is a Bitcoin chart, and I'm specifically on this chart because now the COT they report Bitcoin volume, yeah, for the commercial traders, for the non-commercial traders, and the retail traders. Of course, it's the Chicago whatever, that's CME, yeah, and I know many may not be conversant with COT or how to analyze it, but I think I'll do a short video on how to analyze the commitment of a trader report. So where do you find this report? Yeah. So in your browser, huh, let me just go back. When you search for commitment, okay, commitment of traders. So here, okay. Now, when you come to this page, this is a Commodity Futures Trading Commission. It's the largest. Now it controls all the trading, the financial markets in the US. So you come at this tab here, market data and economic analysis. You click on the commitment of traders. Okay. So the latest reports were released on November 8th. So just ignore this, scroll down, including these disaggregated. So this is the new format, but it's confusing. Maybe for some traders they prefer the new format. But what you are looking for is the current legacy reports. Yeah? So under the futures only here, now you come to the Chicago Mercantile Exchange. This one that we focus on because it's the largest exchange. So you can either use the short format or the long format, but I prefer the long format, and I'll give you the reasons why later. So start with commodities, milk, butter, yeah. So scroll down, scroll down. Now, and the currency starts with the Canadian dollar. Now, for the let's do the Canadian dollar as an example before we do the Bitcoin, because I want us to look at the Bitcoin part. So these are here total open interest. So these are the number of the total number of orders that have been opened for the Canadian dollar, and this here is a change. So it means that this year means that from the last week's report and from the previous report and the numbers they increased, so that the orders, the volume is increasing. Yeah, the professional money is moving into buy into trading the Canadian dollar. If it was a negative, for example, the Swiss franc, yeah, it's a negative 200. That tells you that the volume is decreasing. So if we were to look at the charts and see that the CHF is heavily buying, it's very strong. And then now we come here and see that the volume is decreasing. Yeah, that's an anomaly. And when I'll be looking at the volume, the charts and the volume, this volume here, we'll try to look whether the volume on the commitment of traders report is going hand in hand with the volume on the chart. If it's not, it's an anomaly, and we need to investigate further. So this, okay, that's open interest. So for the non-commercial, these are the hedge funds, and they are speculators because they want, they usually follow the trend, and this is a group that we are mainly interested in. Okay, so we can see that currently they are short on the Canadian dollar, but when you do the net difference, the net short, that's 58,050 minus 39, 556. Now you'll see that the difference. This difference, the net short uh, on itself, it does not give you so much information, but compared to the previous week and the other week, yeah, no, it gives you a bigger picture of where maybe the Canadian dollar is at, because if uh, if uh, if the market is extremely short, yeah, it's or extremely long, maybe on the Canadian dollar, and you can see the number of contracts, the long contracts, they are so much more than the short contracts. Now it means that no one is left to buy. So we might see a turning point sooner or later. For the commercial traders, so these are mainly banks and these agricultural producers and farmers. So they are not, they mainly want to hedge against these currency fluctuations. So they are not in it to make their profits. So this is not a group that you should be looking at so much, because they have no bias in the market, so to say. And finally, these are the retail traders like you and me, non-reportable positions. And mainly these ones, they can be used because the retail traders, most of the times, generally, they are wrong. They are on the opposite of the market. They buy at the top of the market and they sell at the bottom. So in a way, this one can be used as a contrarian indicator. So what the retail traders are is exactly the opposite way of the professional money. Now, the non-commercial traders, these are very influential group of traders, and when we're analyzing these reports, I don't to run and start buying and selling just based on these figures. This one, it's a tool to help us see the market sentiment and quantify the risk. Because after all, trading is about risk, and if we can be able to reduce that risk, Why not? Yeah. So this one is simply a complement of your technical and fundamental. Yeah, by assessing that market sentiment, because this is not a group of traders that you want to ignore. These are professional money. These are non-commercial traders. Yeah, and these are future market. These are pure market. It's not manipulated. It's not like the forex market. Of course, they might be wrong or they might be right, but no. Would you rather go with the retail traders or the non-commercial traders? Yeah. So the COT starts with the Canadian dollar, yeah, Swiss franc, the Mexican peso, the pound. Now, for the pound, we can see that these non-commercial traders are they are selling the pound, okay, and for the volume, you can see it's increasing. So I don't think we should expect to see the pound. If the pound is rising strongly, and yet the volume is falling, that will be not a genuine move. Yeah, it's, a, it's an anomaly. Okay. Yeah. Then the Japanese yen, same case for the yen. See, the volume is decreasing. So I don't expect these people they are not buying the yen. So why should you be buying? Yeah. And now for the yen, when you look at the short and the long positions for the non-commercial traders, there's a very huge difference. They are heavily, heavily short. Now, at some point, when the net difference is very huge, because now these are picture that you should be building week by week, week by week. So every week, when you analyze the COT, and maybe these are around 85,000 or 75,000 net short difference around there. So if next week we were to see maybe the net short would increase and the long would decrease at some point, no one is will be left to short the yen. So we might be near a turning point. And now that's when we should go to the charts and try to analyze the chart now using the technical analysis. Yeah. And now we use the fundamentals, we use we try to see the money flow, if it's the risk aversion or the risk appetite. So this is just a tool in your toolbox to help you analyze the market sentiment. So for the yen, they are selling heavily. So if you are buying, I don't know. It's the volume is falling. They are heavily selling. So I think again, when you look at the Bank of Japan, they have maintained the interest rate at 0.1. All the other central banks, the major central banks, they have been increasing the rates from March this year. But for the BOJ, and the BOJ, it's very notorious. Sometimes it even comes out openly and says that they will intervene in the market. So they have maintained the rates at a zero point 0.1, negative zero point 0.1 for very long. And the other currencies, they've been increasing their rates. So the interest rate differential between the yen and the dollar is like 4%. Also, other major currencies, it's around there, three point something, 2 point something. So clearly, I don't think, fundamentally speaking, technically speaking, and even looking at the market sentiment, I think the yen, we are yet to reach that point when you can say that now we can buy the yen. Now we'll be looking at this figure for the coming weeks, and gradually Now, maybe it will turn positive, yeah, and gradually maybe now the long will be increasing and the shorts now will start to go down. Maybe at that point now, looking at the technicals, we'll be at a point where you can say that now the yen has topped or has bottomed. Okay, yeah, same case for the euro. So for these currencies, I think most of them their volume are falling. See the euro, the yen, same case. Okay, this one is a British pound, same case. Uh, okay, New Zealand dollar, same case. South African rand. Now for the Bitcoin, uh, for the Bitcoin, if you look, because for me, I have my Excel spreadsheet where I analyze this data week by week, and I've been analyzing the Bitcoin data over the last few weeks. Okay, and this figure here, I mean the net difference here, it's been coming from a net short. Now it's shifting to the net long. Okay, because for the 14th, for the I mean October, the previous report, not before this one, and now we'll go to look at it. The net difference here is around 11,285 and 11,303. That's around net long of about 18. Yeah, so 18 contracts. So previously it was the net short. They were majorly short, but now they are coming in and buying. But that does not mean that we buy. We have now to confirm this analysis on the charts. And of course, the volume here is rising. It's not negative. Okay, the retail traders they are buying. Okay, so the previous week, this November 8th, 2022. I want us to go and look at the previous report. Now, when you go back to this website, on your left, there is a tab here, historical viewer, and the previous report was on November 1st. Okay, so we'll click November 1st. Again, we go down to the legacy commitment traders report, Chicago, Mercantile Exchange. And now let's go down to Bitcoin because we saw the November 8th, they were net long by positive 18. Okay. So what we're looking at here is just the volume. We want to see uh, is the professional money coming into Bitcoin, into crypto. Okay. If it was negative, then we'll have to wait for a shift. Yeah, for the professional money to come in. Okay. Now here is the Bitcoin. Now for the previous week, okay, this is November 1st. You can see the net short was 94.19 and the net long was 89.67. Okay, and the total volume was negative. So on November 1st, the total volume was negative, but on November 8th, it was positive 200. So maybe I mean, we can say that the volume increased by 20, almost 28.71. Okay, to give us a positive of 200 here. So the money is coming into Bitcoin. That we can see. Okay. Now the non-commercial traders, they were selling Bitcoin because the net short, the short positions are more than the long positions by around